All right, ladies and gentlemen, I hope you had a wonderful weekend. We got an exciting week ahead of us with the CPI earnings and a bunch of other stuff. We even had a big piece of news over the weekend that affected a lot of companies. I'm going to go over that when we get into the plays, but with how we started off this year, the worst start to the year in decades, it is looking like we are about to have a volatile week. So I got a couple of things I want to go over. I got the plays. I have the keys. We'll go over the events. We'll even talk a little bit about what happened on Friday. I don't know if you guys were there, but it did count as a green day, believe it or not, but it was all down last week, and everybody is still scratching their heads. So, Chad, what I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 last. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, I hope you guys are ready for this week, because some would say that this is the official start of the new year. All the volume comes back. Some traders, hedge fund managers, they're still on vacation even on the first week, and now people are thinking the volume is going to come up this week. Towards the end of the week, you are going to be getting bank earnings. There will even be, I think, WD-40 on Monday or Tuesday, and a couple of other companies, but Friday, you're going to get Bank of America, JP Morgan. You're even going to hear from some of the airlines, which we really have to talk about, and then finally, on Thursday, we're going to be getting the CPI. So we have a couple of things to talk about with what happened on Friday, but as far as the CPI, it is expected to be a little bit hotter on headline. They are expecting core to go below 4 and be around 3.9, but essentially that status quo that we were talking about from last week, it's still going to kind of be in effect coming into this week. People are expecting somewhat of an uptick, but they are pretty favorable, and people really aren't expecting this story to change much. Now, granted, once we get that data, the rate hike odds, they're going to move a lot, because if you didn't see what happened Friday, we had a crazy fiasco, and that's what brings us into key number 2. So before we go over anything else, because I'm telling you, this week is going to be simple, but it should be more volatile because of the events towards the end of the week. Friday was a really weird day, and you have to understand that. Why? Because the non-farms were surprisingly bad by being good. They came in higher than expected. The unemployment rate didn't go up because there was a surprise drop in the participation rate. And then about an hour or two later, we had the ISM services, and then the ISM services prices paid. That plummeted. The employment factor, that plummeted as well. And even the overall index, that dropped. So the market took that as good. And believe it or not, you had a bigger reaction on the bonds and the S&P than you did on the non-farm. So this was the ISM services. You could see TLT, go even look at the 10-year. It rocketed up, and then this was the non-farm payrolls. That was pretty wild, and now even more wild, we eventually sold that all off, and you ended right where you started. But is that the weird part of what happened that day? Half of it. The other weird part of all of it, it was the Fed futures. And I wish I could show you this in another way, because if you were watching it with us live on stream, intraday, it was absolute insanity. Right when the non-farms came out, it was a little bit hotter than expected. The rate hike odds for March plummeted. You see right now, people are still factoring in that we will get a rate cut in March. That is the majority. If we had the Fed meeting tomorrow, they would probably listen to this and cut rates. Thankfully, we have 2 weeks, but the problem was when that data came out on Friday, these plummeted from 60% all the way down to 40 or 30%, and then about 30 minutes after the bell rang, and then we had this little melt up, they came all the way back up, even after the ISM, and this was absolutely fascinating. Even the December odds, if you go down, I still got to play on that, they dropped, and then they came right back up. What started as the narrative being everybody throwing away rate cut ideas for March in the trash, It did not last, and then we moved around. And this is what I'm telling you for the rest of this week with all of the data, with how volatile we saw this on Friday, depending on the data we get, even some of the earnings, this is going to be one of the major things to watch. And on top of that, I'll give you one more thing before we get into the final key. It was what I was telling you guys about on Thursday. Watch for the dollar, whether we go up or down in this market until acted upon by an equal or opposite force, until we get Powell or something to move it out of this little phase it's been in. If the dollar goes down, the market will go up. If the dollar comes back up, the market is going to have trouble going back up once again. And you really saw that on Friday, but you have to be there live. I'm telling you, when I show you afterwards, it doesn't look like much, but intraday, the amount of insanity was absolutely wild. So it'll bring us into the final key, but the last point I want you to understand, the CPI is going to give us a lot of information, but with what we've been seeing lately, especially after that non-farms on Friday, be careful how the stock market moves. What I'm saying is that the narrative may be able to shift a little bit. Maybe the Fed futures moves as well. But what I want you to be careful of is, oh, this data is good, this data is bad. Make a play right away. The stock market may not reflect that, or it may take 7 hours to show the full story of what's going on. So keep that in mind. But now the final key, man, this is what I want you guys to realize. We are watching for the volume to pick back up at the beginning of this week. And what I mean by that is that a lot of people were still on vacation. We did have a couple of high volume days when the market was slowing down, but we are looking for the traders and positioning and some of these weird beginning end of the year moves. We're looking for that to desist, and then we get back to activity and everybody is back there. But sadly, the only negative part to this, I kind of hinted at this throughout the video, most of the events are at the end of the week. So that means Thursday, Friday, that's where a lot of the things are going to be concentrated. We're not going to have too much data. We are going to be hearing a little bit more about the Bitcoin stuff on January 10th. They got that final deadline January 18th. That'll be into next week. You're going to be hearing about the whole government shutdown thing once again. And I don't think it's this week. I think it's going to be next week. We should even be hearing about Treasury refunding, and that could also affect the recent bond rally. But besides that, all of the events are into Friday, Thursday and Friday. Those are the two big ones. And then after the Friday earnings in the morning, we may get a little bit of a reaction, but then it'll be the end of the week. And then you get a bigger week of earnings the week after that. So Chattadonia, I hope you're ready for all of it. We're going to have a lot of different things to deal with, but hopefully without the crazy data to start off the year, let's see if all of the traders come back, all of the investment managers, and see where it takes us. But now, let us get into the plays. So, right off the bat, man, this first play, I'm going to tell you about the news, but we really got to talk about how to play this in the morning, and the play is Boeing. If you don't know what happened, there was an Alaska Airlines plane, the door, like the fuselage, ripped open on the flight, and this was a brand new Boeing plane. Thankfully, nobody was injured. They had an emergency landing, but it was pretty big news. You may have saw the TikTok or the YouTube videos going around with it, but what ended up happening, this led to the grounding of over 171 Boeing planes ordered by the FAA. American Airlines, Alaskan Airlines, and they have the most amount of planes, I believe, that are Boeing. They had like 50 of them, I think, that they grounded, or I guess it was 65. Here is the list, but United Airlines, they have exposure, and it started with the airlines saying, yo, we don't want to use these planes till we figure out what's going on, and then the FAA ordered it. So this could probably be one of the bigger plays for tomorrow, and now, like I'm saying, we have to watch out for how we trade it in the morning. Yes, this thing's probably going to gap down tomorrow, but there's going to be two things. It's going to gap down and then pretty much hold that gap down. I'm wondering if there's a recent day on Boeing where you could kind of see that, or any news events. We hadn't had anything this big, especially for Boeing, in a long time. But what I'm trying to tell you is just watch out. If it's going to stay pinned, then yeah, the play's going to be over. But realistically, your opportunity is going to be within the first 30 minutes to an hour in the morning, because even if it gaps down, you might get one of those stupid computer buys up, and then that's going to chill out the premiums. Oh, that's the example I was thinking about. Walgreens. So remember, Walgreens, they had the little death blow, and then they came back, and then they stayed pinned, and then they went up. Maybe Walgreens even drops this week, but this is how they kill the option premium, and this is what we got to look out for. But essentially, I'm expecting one of these moves, a big drop. Maybe it'll bounce up, and then if it's really bad, it'll flush once again, or it'll stay pinned, and then it's going to be burning theta and all of that. But this is definitely going to be one of the biggest plays all week until we get any earnings. So I'd keep your eye out for this. This was absolutely huge news. That is play number 1. Then play number 2, we had this play from last week. We brought it up a little bit, but MSOS. This is the weed stock ETF, and the reason why I made a play on it, there was updates at the beginning of last week talking about the declassification of weed once again, and then newsflash, we're coming into the election. You may get bullish headlines about legalization and making moves. They need to get that young vote. Let's legalize weed. So it's pretty good timing, but then again, it is the beginning of the year, so watch out for that. But the only other thing I'd say watch out for, the options absolutely suck. And why do I say that? Because we have options on the play. We made our play around here. The stock has already gone up $1 on a $7 ETF. That's a pretty big move. I think it's up over 10% already. I grabbed the January 19th. I got a short amount of time, and on this play, I did use the 2 standard deviation strategy. We posted that video a couple of days ago. Even though there was an event, I did go out around 2 standard deviations just in case this thing moved more than expected, and it kind of did, but the contracts are only up about, I think, like 30 or 40%. We played it small. Maybe I'm just getting greedy on it, but we're getting close to the money, but they barely moved. And on Friday, they had a bigger move as it kind of had a ramp up towards the end of the day. So watch out for this. Again, I'm on a shorter term play. We got like one more week of time after this week. But in general, though, throughout this year, we've brought up these weed plays. They may be a good flip to go for with everything going on with the election. So watch out for that. That is play number 2. And then finally, play number 3, we talked about this one a lot, and we got a lot of questions, and now I'm going to refer everybody to this video in the meantime, but MPW, they got absolutely waxed on Friday, and the reason why, because the company said that they wanted to update the plans on how they're recovering money from Steward. They said they want to speed it up, but they also said they might not be able to get it all back because they have liquidity problems. This was very, very bad, but even worse, after saying all of that stuff, they also announced that they're giving this company that they're trying to accelerate the recovery from that is illiquid, they said they're going to give them a $60 million loan. Again, they did this on their last quarter. They had good earnings, and then they said they're doing this little deal for equity in this company, and it led to the stock getting clapped, even though the earnings were good. So a lot of people have been asking me, what do I think? I'm getting murdered on this, over 50% in the long term, probably one of the worst trades. I think maybe like AT&T or Big Commerce. Coinbase was worse at one point, but in general, this has been an awful play for the long term. However, I am still going to be riding with it because that's the long term. I made a 10-year plan, and this is how I wrote up a lot of things. The one thing I did say on Friday, if they do cut the dividend from here and eliminate it entirely, then I'm probably going to be out of that one for sure. And like to give you an update here, I will not be buying any more of this stock until there is a earnings that shows that management is taking a different approach to how they're handling this, because borderline, they are shady. They are shady by keep doing this over and over again with giving money into the dumpster fire. And there's a lot of reasons people have said maybe it justifies saving this tenant and it's better for everybody. But when it's all said and done, this is starting to get very fishy. Some people already called that out prior, but now definitely with this news of Steward's liquidity being very tied up, even MPW is getting worried. The vultures are circling and people aren't liking that. So you may be able to try to flip this. I've tried to do that at times and gotten waxed on it because this will move volatile. And again, it is tied to the REITs and all of these longer duration companies attached to the rates if the rates go down, but management is the real big problem on here, and now we don't know which way it's going to go from here. So I hope this answers all your questions, and again, I'm not really looking to get into it, but I am still going to be holding it, but I'm not going to be trying to force anything, even though it'd be a great average down. It'd be a great play. I liked it at 7. I should love it at 3, but like I'm saying, we didn't know management was this shady And again, at this point, I think they've given more to Stewart as much as they probably could have paid the prior dividend with how much money they've been letting Stewart get away with. So we'll see how that all plays out, but that is the final play. As far as everything else, I did make a couple of plays on Friday. We shorted the bonds. We got out of it. I'm still in my ES and my RTY. ES to the downside, RTY to the long side, and there's only one more play I'll bring up, ANSS. I made 25 shares on this at like 354 on Friday, and if you guys remember, we even made a play on this. I think it was Synopsis, SYNP, I believe. No, SNPS, but we saw this a couple of weeks ago, or again, literally right before the new year. It was news that Synopsis was going to be buying out ANSS for a 400 deal. It's a merger, both cash and stock, but they had another update on Friday. It was a Wall Street Journal exclusive. They were saying that by next week we may get an answer. I thought we had it early, thought it would have more follow through. I top tick with 25 shares, but still holding it because, again, we're either going to get an update this week or not, and if you don't, then that means it'll probably die down a little bit. So going to watch out of that, but if I could get back to break even a little bit more, I will be looking to dump that one quick. But if you're into any of those buyout plays and some of the arbitrage, this may be something, and somebody brought this up earlier. Think about what you got going on here. You have seen a lot of mergers and acquisitions, everybody with rates, all the cash on the sideline. M&A may be a big highlight for this year, so maybe we find a lot of other buyouts. If you're interested in that, I would definitely keep an eye out for that. And then the final cherry on top, like I told you guys, watch out for like XLV and healthcare. I do think there is the JP Morgan Healthcare Conference that will be happening this week, as well as the Consumer Electronics Show, CES in Vegas. You may get some updates, maybe even some AI updates. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, you got a power inside of you, and I hope you focus on making sure that you unleash that power and potential. And that should probably be the only thing you praying about, baby. You don't need things when you got everything inside of you, baby. But Chad, I hope you're ready. I hope you had a rested weekend. Get ready for week number 2. Welcome to 2024, and horn.